Forget alt season that plays already dead. While everyone's chasing the same headlines, smart money is moving into a completely different corner of crypto. This is exactly what will blindside 90% of traders. And if you miss this rotation, you won't just be late, you'll be months behind the next big move. Alright, let's zoom in on something that's been making the rounds in analyst circles, this chart breakdown from Gareth Soloway.
Look at this chart, guys. This is a little bit concerning for Bitcoin. Now, again, listen, Bitcoin could go sideways and altcoins maybe are getting ready to rip higher. I actually think that's a plausible scenario for altcoins to start to outperform, and I'm going to tell you why. Altcoins to me, and I'm not talking about Ethereum. Ethereum's done great. Granted, it hasn't made a new all-time high, but very likely I think it can. But the thesis here is you have a parallel. Beautiful highs all along here. Notice every time you hit it, you pull back. Every time you hit it, pull back, pull back, pull back, right? And the idea here is look at the low. Low to low, and Bitcoin dominance is starting to slip. So the idea here is it doesn't necessarily mean Bitcoin is going to come lower. What it actually could mean, maybe Bitcoin just goes more sideways, but altcoins start to gain traction. But the thesis here, what would make altcoins start to gain traction? And the answer would be, is that if the Russell, I look at altcoins as the Russell 2000. The Russell 2000 is basically small caps. So if small caps, which have underperformed the S&P and the NASDAQ, if they start to outperform, money goes into, essentially rotates from big cap tech down to small caps. Money could rotate from Bitcoin into altcoins. And so again, Bitcoin dominance, a lot of people look at that and say, oh, that's really bearish for Bitcoin. It actually just may mean that Bitcoin is going to, if this is truly breaking down in the near term, where Bitcoin dominance could at least come back into this level, and that could mean another leg up.
Okay, so let's unpack that, because Gareth just dropped a pretty interesting framework. He's not saying Bitcoin is about to crash, and that's important. What he's actually suggesting is that Bitcoin could continue moving sideways while altcoins start to gain traction, and that idea rotation is worth exploring. In traditional finance, investors rotate from large caps into small caps to chase more upside. In crypto, that means capital flows from Bitcoin relatively stable into altcoins, riskier but with more potential returns. So when Bitcoin dominance starts slipping, people assume that's bullish for alts, and sometimes they're right. Bitcoin dominance dropping isn't automatically a green light for altcoins, and this is a mistake I see retail traders make all the time. Sometimes a drop in dominance doesn't mean rotation, it means capital is leaving the market altogether. That's a critical distinction. So what should you actually do with this information? Don't trade dominance in isolation. Track DEX volume, stablecoin movement, and alt loan activity. And don't assume every alt pumps look for sector-specific rotations, like AI or real-world assets. This isn't alt season. It's targeted capital rotation, and timing it right matters more than ever. Let's hear from Anthony Pompliano, ex-Wall Street, deep in the crypto trenches. Anthony Pompliano.
I think that there is this narrative that Wall Street is going to put on an asset, which will lead to some flows. But there's one thing that Wall Street has historically shown that they do not understand, which is the disruption via innovation of technology. And I think that's what we're watching play out here. So I publicly have come out and said that I believe in December of 2023, Ethereum that I had, and I bought Solana. I'm probably not going to be holding Solana 10 years from now, right? Probably not even 2 years from now. But from a pure short-term speculative trade, I said Solana is going to go up more than Ethereum will. That has played out, right? But I understand where the narrative is coming from. The reason why I understand where the narrative is coming from is because Wall Street is driven by narratives, but narratives can disappear as fast as they appear. And I think what you are going to watch here is you are going to see an assault on the Ethereum narrative over the next 3 to 6 months, where a lot of the things that they've been hanging their hat on are going to look very, very wrong. So I saw recently somebody went on television in the Ether community and they said that Ethereum could be bigger than Bitcoin. Stop. Come on. Stop it. I think that Ethereum over the last year is still down like 20% against Bitcoin, right? It has crashed against Bitcoin over the last 5 years or whatever. The Bitcoin rate of return of most altcoins is negative. Now, that doesn't mean people can't make money today, right? There's a lot of people who are going to go buy this. There's yield. There's all these stories to it. I think that what we are going to find out though is specifically in the public markets. If you are going to use an asset as a reserve asset, you want something that is built to store value. That is not the role of most of the altcoins. They are more technology platforms. They are trying to do other things. It's not good or bad, but I do think that people are drastically underestimating Bitcoin's potential to serve as a global reserve asset, which means that if it is valued at $2.3 trillion today, it's going to be worth a lot more than that in the future.
All right, so here's what I really like about this. Pompliano isn't trashing Ethereum or Solana. He's not being tribal, he's being strategic. He says, know your assets' role. His Solana buy? Pure speculation riding narrative momentum for short-term gains. It worked, but he's also clear that's not a long-term hold in his eyes. That distinction matters. Too many people blur the lines between what's hot and what's foundational. Just because something's pumping doesn't mean it's built to endure. And this is where the conversation around Wall Street gets really interesting. Institutions love clean narratives. Ethereum will flip Bitcoin. Solana is the new Visa. Sounds great on CNBC. But when the narrative shifts, and it always does those same institutions exit just as fast as they entered. What Pomp highlights, and I agree, is that Bitcoin isn't a tech platform, it's a monetary infrastructure. It's designed to be a store of value, and its potential as a global reserve asset is still deeply underpriced. Ethereum, Solana, they're like early internet companies, powerful, experimental, but built for different use cases. And that's fine. So here's the question. Are you positioning for hype cycles or for enduring value? And on the macro side, Tom Lee brings a perspective most analysts won't admit yet. His view isn't about short-term rotations or flipping tokens.
I think that if someone wanted to understand the use case for Bitcoin, and there's many, but they don't have a lot of conviction around something, to me, I could say easily it should supplant gold. And so I think Bitcoin should be, over $1 million over time. And I kind of prescribing to the view that there's probably a chance that maybe the 4-year cycle is ending for Bitcoin because of the way institutional adoption of that thesis is taking place. And so you have institutional and essentially permanent holders of Bitcoin coming in. So I think Bitcoin should really build upon this 120 before the end of the year. So I think the crypto treasuries, there's going to be winners and losers because there is a scarcity to it, actually. So Bitcoin is scarce. And so it's proper for companies to have Bitcoin on their balance sheet over time. And I think banks will, because banks, as Bitcoin really does get recognized in its proper place as how you move money in the financial system, then the banking sector will actually stake Bitcoin as well. They're going to want to own it, And so these treasuries are doing what other businesses will eventually do. But for them to get a premium to their Bitcoin because of how they're executing a strategy, that is the scarce.
All right, this is big if you really zoom out. Tom's saying what most analysts are still hesitant to admit. Bitcoin is no longer just a volatile risk asset or a speculative play. It's rapidly evolving into the backbone of future financial infrastructure. And when that shift happens, price movements won't just follow halving cycles or retail hype. They'll be anchored to institutional balance sheet decisions and macro adoption curves. He throws out a price target of 200K or even 250K, but that's honestly secondary to his bigger point. Bitcoin is on a path to becoming a corporate and banking reserve asset. Think about that. When not just individuals or hedge funds, but entire sectors of the global economy start treating Bitcoin the way they currently treat gold or treasuries, you're looking at a complete repricing of what Bitcoin even is. Tom also brings up a critical point often overlooked: execution strategy. It's not just about having Bitcoin on your balance sheet, it's about how you're managing that exposure. If you're a company with BTC holdings and you know how to strategically deploy, hedge, or earn yield on it without compromising scarcity, that could give your company a valuation premium. So for us as investors, here's the real takeaway. This isn't just about stacking sats anymore. It's about understanding the institutional framework being built around Bitcoin. As banks, corporations, and eventually governments integrate Bitcoin into core operations, your investment thesis needs to reflect that. It's not the Wild West anymore, it's the early foundation of what will become the monetary spine of the digital era. And if that's true, Bitcoin isn't just the trade it sets the standard. Next up, here's something powerful from Anthony Pompliano, again.
The thing that now is going to happen with Bitcoin is everyone's starting to say, wait a second here. There's a lot of manipulation going on in the traditional financial system. And so I need to find something that is going to actually perform. That's why I see Bitcoin and gold both going up. Now, why do I say that inflation is going to come? It's not because of the tariffs. We are going to get higher degrees of inflation over the next, call it 6 to 9 months, because they are going to print money. They're going to cut interest rates and they're going to print money. Now, you can make the argument that we do need that, right? Why? Trueflation, the alternative real-time inflation metric, shows that we are currently sitting at 1.8% as of today. Now, why is 1.8% important? Well, it was at 3% in December. So if you zoom out just 6 months, all the noise, all the chaos, all the doomsday predictions, all the nonsense, we went from 3% inflation down to 1.8%. If we're at 1.8% and unemployment is just over 4%, that tells the Fed cut rates. Guess what's going to happen? They're going to cut rates later this year. The market's pricing in up to 3 rate cuts. They start to cut rates. They don't know how to cut rates without printing money. They're going to start printing money. And so if you get rate cuts plus printing of money, guess what happens? You're going to see inflation start to tick up. Now, I don't think that inflation is going to go to 5 or 6% like all these people are predicting. I think inflation may go from the 1.8% that is the real-time metric today to maybe goes like 2.2, 2.3. Doesn't sound like that much, but it starts to be 20 to 30% increase from where we are today. So what should that do? Asset prices are going to go up. You're going to see Bitcoin, gold, stocks, everything continue higher in the second half of this year. Now, why else is Bitcoin going up? A lot of people are buying it. And you're now starting to see the ETFs. You're seeing these treasury companies, and you are also now starting to see a bunch of other types of funds. One of the most interesting ones are these real estate Bitcoin funds. So you have Newmark that's come out and said that they're going to have real estate plus Bitcoin. They've got a unique way to think of the Bitcoin as collateral as part of the loans. You've got people like Grant Cardone who are coming out and they have real estate funds that are taking some of the money and they're putting it in Bitcoin. So you're starting to see Bitcoin getting stuffed into every corner of the financial system. And they want to figure out, how do we take this asset that brings new users, new clients, new assets, new revenue, and put it into our traditional products?
This is where things get really interesting. What Pomp just laid out is a chain reaction. Real-time inflation is low right now, 1.8%, but that's why the Fed's next move is almost guaranteed. The market is already pricing in rate cuts, and when those come, the Fed's toolkit hasn't changed. They'll print, and printing money pushes asset prices up. That includes Bitcoin, gold, equities, everything. But here's the twist. While gold benefits, Bitcoin has a multiplier effect because of how rapidly it's being integrated into financial infrastructure. We're seeing it now. Real estate funds like Newark are blending BTC with property deals. Cardone's group is allocating BTC inside real estate portfolios, and ETFs have cracked open institutional floodgates. It's not just the crypto bros, it's treasuries, funds, and platforms quietly absorbing Bitcoin. What this tells you is simple. Bitcoin isn't fighting for adoption anymore. It's being absorbed quietly, strategically, and structurally. So while everyone's watching rate cuts and CPI, they're missing the bigger picture. Bitcoin is becoming the default exposure for risk-tolerant capital. So, what should you do? Don't just watch the charts, watch the rails. Because Bitcoin is no longer knocking on the door of TradFi, it's already moved in. Now let's pivot to Lyn Alden, who doesn't just track the crypto market, but also connects it to global macro, accounting policy, sovereign behavior, and long-term structural shifts.
Yeah, I continue to be bullish long-term, and then even in this cycle, I don't think the cycle's over yet. I've liked the fact that we get these kind of mini cycles of, slightly euphoric and then 7 months of sideways chop and another spike up. I expect that to continue at least for, we'll see what happens the rest of this year. But I still think we'll see higher prices before we hit some sort of longer correction. They immediately started marketing the idea to other corporations. They would hold a conference like, Bitcoin for treasuries, and really no one followed them anytime soon. Not many people were in the position of Michael Saylor, where he had such a strong ownership level of the company, was able to think in terms of years and decades rather than quarters and maybe a couple years. So instead of being like a career executive, like someone who could get easily fired or just trying to optimize their near-term pay package, he was an owner and able to kind of make these long-range moves. That's pretty rare. But we started to see this cycle finally after a cycle delay, better accounting rules, and like a lot of Bitcoiners saying, well, if existing companies are not going to do it, we'll basically start new companies and do it. So it took more time than many people thought, but it kind of followed. And I think the same thing happens with sovereigns. sovereigns. I mean, obviously El Salvador was an early mover. The Kingdom of Bhutan was an early mover. You see like, UAE at the sovereign level makes some mining investments and ETF investments and things like that. There's, a handful of entities out there. Generally speaking, the smaller ones can kind of execute faster on average. I think we'll continue to see talking about it more so than like, someone kind of just like jumping in and wanting to buy half a million coins from some big country and kind of doing the full MicroStrategy playbook. But I do think that over time, this will continue to leak into sovereigns. They'll own it indirectly. Like you'll see a sovereign wealth fund own MicroStrategy, for example, or own an ETF, or potentially buy some Bitcoin around the margins. And it just kind of keeps trickling in from there as it becomes a bigger, more liquid, more understood network. I think that one of the bigger things this cycle is increasingly understood at the sovereign level. At least it's here to stay, with like the SEC kind of losing their court case and having to let the spot ETFs come to market. And then this kind of pro-Bitcoin, pro-crypto administration, which is that even if, I think the market's going to reach the point of scale and acceptance where even if say there's, elections down the line, we have a less favorable administration, it's hard to roll back all of it. Even if you take, three steps forward, one step back, it's still two steps forward, especially when you're looking at a global scale where, one country could, pull back, another country can say, well, then come to us, we'll bring your businesses and your capital and here. So I think this cycle is kind of marked more by it's here to stay at the institutional scale and allowed by, most at least semi-free countries. And over time, as more cycles play out and as the asset hopefully stays big and liquid, you'll get more sovereigns that actually maybe want to buy it and hold it at scale.
Okay, so let's unpack what Lyn just laid out, because there's a lot of nuance here and some of it directly challenges how most people think about crypto cycles. First, her point about mini cycles inside the broader bull run is a gem. Everyone expects either massive euphoria or an all-out crash. But what Lyn's observing, and we're seeing it play out, is a much messier, more realistic pattern. We get short bursts of hype followed by long periods of sideways chop. This frustrates impatient traders, but it creates a serious opportunity for those watching under the surface strength. Most people blow up their accounts here chasing the big breakout that never comes. Meanwhile, the quiet builders are stacking positions before the real move. Here's the thing. Instead of waiting for the next alt season, start tracking altcoins or sectors that hold strong support and continue building during the chop. Real-world asset tokens, DPINs, and decentralized infra projects are showing early signs of this behavior. That's where capital may rotate before another breakout. Then there's the corporate adoption side. Everyone says, why didn't more companies follow MicroStrategy? Lyn nails the answer: accounting rules. GAAP made Bitcoin look terrible on the balance sheet. But now, with new fair value rules, crypto gains will actually be reflected properly. That unlocks a new wave of potential corporate bias, especially firms with long-term leadership and strong cash positions. And finally, sovereigns. Don't expect them to announce they're buying 100 zero BTC. Instead, watch how they move indirectly through ETFs, public companies, or mining. That slow creep is already happening. So here's your takeaway. Track changes in accounting, regulation, and sovereign capital flows, not just price. This isn't about hype, it's about foundational shifts happening beneath the surface, and that's where the long-term edge lives. So here's the bottom line. Whether it's Gareth Soloway's altcoin rotation thesis, Lyn Alden's breakdown of sovereign adoption, or Pompliano's inflation plus integration outlook, the signal is clear. Crypto's not just surviving, it's evolving quietly, strategically, permanently. The smartest players aren't chasing candles, they're positioning ahead of the wave. So if you're serious about catching the next move, watch the infrastructure, not just the price. If this gave you a new lens on where things are heading, hit that like button and subscribe, because we've got more of these deep dives coming, and you won't want to miss what's next. Stay sharp, stay ahead.